Hello.
Howdy, partner. Can you hear me?
I can. That made me laugh.
All you gotta say is howdy, partner.
Howdy, partner.
Faster than that, or people think you're slow in the head.
Howdy.
Howdy, partner.
Howdy, partner.
Uno más?
Uno mas.
Uno ma.
One more. Uno
Okay.
mas.
螃蟹一样找8个，两头尖尖这么大个。
So am I looking good?
Well, your camera's doing what it can. All right. Welcome everyone. So good to have you with us this evening. Tuesday training, back together. So excited for tonight, guys. I know Dad has got a ton of gold in store for us. So welcome to everyone tuning in live. I can see a stack of your names there. Always so good to have you on with us live. And I know a bunch of you are going to be watching us later on YouTube. So if you haven't yet, click the like button and the subscribe button, all those things, so you get notified every time we drop these recordings. But otherwise, guys, let's dive into the training. I know Dad's ready to go. So without further ado, Dad, I'm going to find you and pin you, and we will dive into this evening's shenanigans. So there you are. Thanks for being with us this evening. Thanks for putting in the time to put together all the gold for the tonight. And otherwise,
It's a pleasure.
over to
Welcome,
you.
everyone. Good to have you all join us. I see some smiling faces. Very, very good. And yeah, I've got kind of a bit of licorice all sorts. So I was going to go in one order, and now I'm going to change it slightly and mix a few things together, but I'm sure there'll be some value. So I don't know where you're all looking from. It is wet and windy here in Auckland tonight. It is pouring with rain. But it's good to be together and do some training. So I'm trying to figure out a good title for what I want to say. I was chatting with Ty earlier. So basically, we're going to be looking at levels and signals. That's probably the key thing, levels and signals. So we're going to do a bit of back testing on the high time frames and look at those different levels we drew, and also the fibs and the trend lines, and just do some back testing. And I'm sure you'll be encouraged by what you see. I don't know if Mark has joined us tonight, but well done to him. When he posted one of his trades, he had his 4-hour trend lines showing, which is excellent. So well done to you, Mark. You may be working still, not sure if you're home, but I'm sure you'll listen to this later. Well done. Good to see you putting all the teaching into practice. All right, so I want to first say, before I just share my screen, is that one of the rules, you've heard me say this very often, is that I never enter a trade without a signal. So if you remember anything tonight, never enter a trade without a signal. All right, because one of the main reasons is you never know when a pullback is going to take place. So I never ever take just a random entry on a candle unless there's a signal. And the reason why we wait for a signal is that signals generally mean there is momentum. All right, so the way I've kind of structured the programming to our indicator TrendForce that we use is that every signal generally indicates there's going to be momentum. And where there is momentum, there's always a higher probability that you can enter into a risk-free position. And so when you enter a trade without a signal, you never know when it's going to pull back, stop you out. You know, of course, the trade can run 100 pips without a signal, but it's always, always risky. And so with TrendForce, at least I'm going to cover about 13 signals. That's potentially how many signals there are. In fact, it's about 13 signals that you can use to enter a trade with the indicator. Now, I don't know if I'm insecure, but when I was developing and making this indicator, I could actually make almost a signal on every single candle. The thing for me in designing this was what to leave out. If I showed you some of my earlier efforts, there were just like stars and stripes and arrows and circles, but you don't need that many. I think 13 is enough. So if we can share my screen, are we good to go? And there we go. And I want to just put the chat as well, so I can just see if there are any questions, and I can keep an eye on those as well. So there we go. So hopefully you can see my screen. I'll move the photographs, and you can't see what I'm doing. But what happens is when I share my screen, all your wonderful faces are right in the middle of the screen. So we're going to do things a little bit back to front. I was going to start with all the back testing, but I thought we'll start with some back testing, but we're just going to look at the signal that popped off. This sell signal popped off at just after 5:15. So I just want to analyze that signal, because these are the signals that we look for. So, a lot of things made this. I think this was about 180 pips. So if we took from the sell signal right down to the bottom, that's almost 190 pips. Now, there's a good reason why the signal went off. So, and we're going to analyze a few more things as we go along. But if we just look at this area over here, these are signals you should always look for. There were a number of reasons that made this thing like a really strong signal. I mean, the first one is, besides it being bright red, that means it's probably going to move, is that if you look, there was what we call compression. And I tell you, it's amazing how many times you get this kind of sell. There's, I was saying to Vickers like a couple of weeks back, there's often a sell around 5 o'clock on the Dow and the Nas. And it's amazing how this pattern, you often see this pattern. This is what I call a super signal. When you've got a sell signal that's compressed against the 55 and the 233, those trades always move. And even though the setup wasn't ideal, because we can see purple, the 987, teal, the 2584, that those were, not aligned. It would have been yellow. Our zone alignment would have been yellow at the time of the signal. But still it flew. So the one reason was we had compression round about the signal. Of course, there were other good things about it. On the signal, I'm just trying to delete this. Let me just delete my circle. Boom, there we go. All right, if we look, and I'm just going to do a vertical line, so it's really worth looking at a good signal. And then Tars taught me to sync globally. So if we look at the 3 minute, we can see at the same time there was a sell signal. The 3 minute, we can see already the trend zone was in order, nice red. And there was two signals that we're going to look at tonight. There was a triangle down and a bearish crossover. And if you look at the 8 minute, there was a counter trend signal at the same time. Plus, we can see that the trend zone crossed over way back at 4 o'clock. All right, so the trend zone, the main trading trend zone, there was a crossover around about 4 o'clock. And on the MACD, 20 past 3, the MACD gave us a bearish crossover. So everything pointed to a huge move there. But what are we going to look at and study more tonight? I'm just going to delete that line. One of the key reasons why this moved, and we're going to end the session with this, is that if we blow up the 8 minutes, we'll turn off the indicator. You can see what happened here. Look at this for price action. Wow, I mean, you can see this is my pinkish lines are key support levels. All right, so of course they can serve as resistance levels, but obviously as price moves, they can also become support levels too. But we can see what happened here is that if we go back, we can see price moved up to the significant level. Remember, this was drawn of our 4 hour. So in case you weren't here last week, let me quickly pop across. We encouraged everyone to do higher time frame analysis. So this is to get a 4 hour chart. Now it looks like a spider's web, but you can see I've drawn in all the key levels, previous highs, previous lows. I've done a fib plus significant trend lines I drew in. So it looks messy, but when you go to the 8 minutes, so we'll go back to the 8 minutes. When you go back to the 8 minute, then these lines don't appear often on your chart. You may not sometimes see any in a session, but when they do appear, they are significant. So we can see what happened was, look at this time, this morning, around 6 o'clock, it tested that level 4 times. Now this is in 8 minutes, so that's 32 minutes. It couldn't break through that level. So this resistance level we plotted from a 4 hour chart. Then it came back up to that level at about half past 1. And look how price moved around that level. And you can see once price closed below, it fell off a cliff. And what I like about this trade, you can see this is a 4 hour trend line that goes way back. If I move my screen back and back, you wouldn't see the bottom of that trend line for quite a way. But you look how that ended. And this is what we're going to look at the end of the session. That trade ended exactly to the millimeter on that 4 hour trend line. And so the point I was trying to make last week is that drawing these lines are huge for support and resistance. So we can see it's come back to this other previous resistance line, rejected it, and now it's hanging around this trend line. This gray line is a fib, it's the 0 on the fib. And so it's basically trapped in this area. So it's interesting to see what price does. So I wanted to point that out. We're going to come back and do a lot more back testing later. But a key reason that price fell so radically is that it rejected a level. And so tonight I'm going to talk about rejecting levels and looking for signals. All right, so if I'll just blow up the 1 minute chart, and I'll keep an eye on any questions, and I know Ty will keep an eye on too. So if we just blow up the 1 minute chart, so we're just going to look at all the different signals. And so again, I said earlier, never enter a trade without a signal. And so if we firstly go to the main, good morning, Mark. If you just join us, I sung your praises earlier. You need to re-listen to the video when it comes out. But I just said I was so impressed that when you showed your trade, that you had all your 4-hour trend lines in. All right, and that's the real key, is that you can't just press buy and sell. You've got to understand the bigger picture of what price is doing, price action. And that's what looking at the 4-hour and also the 1 day chart gives us, a good idea of what price is doing. All right, so there are at least 7 signals that I look at when I am looking firstly at the main indicator. So obviously there's the buy and sell signal. Okay, that one we wouldn't have taken based on the rules. You get buy and sell. I've counted that as one signal. Then you also get counter trend. We can see this counter trend signal. I mean, based on the higher time frames, those counter trend signals already, the 8 minute was already bearish at that point. So that was already a sign that price was going to move. And so we got our buy and sell signals. Then number 2, we've got counter trend signals. And also we have, which I've re-added back, is buyer and seller momentum. So I've made them a little bit more inconspicuous. So we have this little red wedge for seller momentum and this green wedge for buyer momentum, and I've placed them right at the top of the wick so it doesn't make it look too crowded in this update I gave. So those are already 3. Then the other key that I've said, the secret sauce, one of the secret sources to this indicator is the 55 changing color. And so this is very strong. So no one will know how I've coded that. I really believe it came by revelation. I was out walking and I had the thought and I tried it and it works. So that is a signal. And with this latest update you got a couple of weeks back, 2 or 3 weeks back, I fine-tuned it so it comes earlier. So it also is an early warning. So if we look at this trade, we can see that the 55, which is equivalent to the 3 minute trend, it went bright green way on that candle. Bright red, sorry, in that candle. So that's a warning. So you can enter a trade with the 55 either going bright red for a sell or bright green for a buy. So that is the 4th indicator, 4th signal we can use in the main indicator. And plus there's our lightning bolts when we break a level. And so we wouldn't have taken that one. There were good reasons, because on the 3 minute, 8 minute, there were resistance trend lines. But those are valid. I do quite a few trades based on that signal. So when you break a previous high or a previous low, you get the lightning bolts. I'm not sure if there's one anywhere down here yet. I haven't scrolled all the way. I mean, look at price dropping here again. Wow. Price just keeps falling. All right, so that is number 5, the lightning bolts. Then also we look at an example. Even a candle changing color can be a signal. Let's just have a look. Here's an example. So if we look at this trade over here, this signal. So I said even a candle changing color, but there is a condition. You can't say once it changes color, say from dark green to bright green, if you're too far away from the main trading trend zone, I will never do that. But when it changes color and you're right in the trend zone, that is a valid signal. So if we just look at this trade, for example, let's have a look down here. If we look down, if I draw a vertical line, we can see rejection of a line is always a key. Rejection of a level. We can see how price went up, came back right into the main trading trend zone, and it rejected the 21. So when the trend zone narrows, that's in a sense accumulating liquidity, and we can expect a breakout. So on that candle, we can see we had a triangle up. But what I want to look at is the candle changing color. On the next candle, we can see that went bright green. And so that can be a valid entry, because remember, there are 3 levels. I call this candle strength intensity. Every time a candle changes color, it means more buyers are entering. So from that candle to that candle, more buyers jumped into the trade. And obviously from the dark green to the bright green, more jumped in, but that was too far away. But when a candle changes color, and if it's touching and sitting right in the main trading trend zone, that is a valid signal. if we just look here, this was a strong entry point. I mean, it wasn't, normally there's not a lot of volume. And how much, this wasn't a big, maybe 25 pips, but I mean, that's still 25 pips. I would never say no to that. That's 28 pips, so that was a good trade. We can see quite a lot going on here because on this candle, so number one, candle went dark green. We're looking at signals. We also had buy momentum. And at the same time, you can see there was a bullish crossover circle. We'll come back to that later. So those are the kind of entries you want to look at. Look at, especially when there are multiple signals on the same candle. I mean, if you just scroll back, you will see examples. Let's just see that one there. There was, can you see two signals on the same candle? We can see we got buy momentum. At the same time, down on the MACD, we got a bullish crossover. So I often look for trades. That's why I'm a pro. I mean, Tyron, of course, trimmed me back because I had a lot more other little bits and pieces. But I mean, what we've got is more than enough. All right, then the other one, so I said there were 7. So 1, you got a buy and sell signal in the main indicator. Number 2, you got counter trend signals. Number 3, buyer and seller momentum. Number 4 is the EMA 55 going bright. So in fact here, that went bright on that candle. So that wouldn't have been, you could have entered there because there's a signal. So as that, there's a double signal. As that went bright green, the 55 went bright green, that means you're likely to get into a risk-free position. All right, I say there were reasons the trade wouldn't have gone further than that. In the 8-minute, there was a resistance trend line on the 8-minute and the 3-minute, so that would have been your target. But that would have been a safe little scalp, So again, looking for multiple signals. So 5 is the lightning bolt, 6 is candles changing color. Then the last one, I do delete them just to save memory, because as you know, this indicator I've maximized. But when you get these stars like lower lows or higher highs, remember this star would have started way back, would have started probably on that candle. That can also be a valid entry because you've then broken the previous low and prices moving down. And likewise, that star would have started way down here. Of course, that's very counter-trending, may not have taken it. But when price has gone sideways and you get a star, that means a breakout. So that also can be a valid signal to enter a trade. So there are 7 signals that you can use. I've tried to think of just about all of them. 7 signals that you can use to enter a trade safely. Remember, every signal, there's a high probability that there's momentum. All right, let's just look at this signal. I mean, this one you would have got stopped out. But I would have been nervous about this, taking this sell signal, because there's a saying in trading, always look left. I mean, the problem here was we got teal, which is the 2584. And you always look left. We can see price came down to, remember, this is a main trading trend zone. This is the 4-hour basic trend zone. So it rejected it once, popped back up, a little double bottom, tested it twice, popped back up. We got a sell signal. That would have been very risky because we can see it's rejected it a number of times. Every single time it touched that line, there was a pullback. So that wouldn't have been a safe entry, taking that sell signal. You would have got stopped out. The stop loss would have been about over there. So I would have waited for another signal to take this trade. And if we just draw a vertical line, look at that candle over there. Although there was a slight pullback, price did close below. But what's happening here, our MACD, which is my next point, going bright red, which means there is momentum. Let's just look at what was happening on the higher time frames to see if there was any. So let's just think this globally. So we're looking at signals tonight, think globally. What was happening? Okay, now that would also be risky because we've got the 987 there, but we can see we had a triangle down, bright red. And on the 8 minutes, we've rejected the trend zone. We had crossed bullish crossover, but that still would have been probably a safe trade. That would have probably moved in a strong downtrend by now. So let me just delete that. All right, so if we let's look at the MACD now. So if we go to the MACD, I've talked about this quite a few times recently, but this MACD is major for our strategy. So let's just go back to where we got some really clear signals here. So the MACD tells us a lot. Now remember, the basic rule is that we want confirmation that the MACD is matching our trend. So if we're taking a sell, we want to see a crossover. So the indicator won't generate a sell signal unless the MACD has crossed over. So obviously for a sell, we want a bearish crossover. We want to get the signal after that circle. And this is not really a good buy signal, but we can see there is a bullish crossover there. But obviously we're not going to take that bar to counter trend. But we want to see those kind of things taking place. Now, the one key, I wanted to see a good example because this morning I stayed out of some trades. I don't want to go all the way back to this morning. Maybe we need to. So I want to look at an example. Now, let's just go back to this morning because I tell you when it's dangerous to take trades is when the MACD is running almost parallel. So the safest place to enter a buy, for example, this is the safest place. So if we're just looking at the MACD, when you get a crossover, so this, although we haven't got a zero line drawn in, this is called the zero line. If you look back on the scale here, you can see there's a zero over there. The safest place to enter a buy is when you got the crossover below zero. And the same for a sell. I mean, this is not a sell over here, but the same for sells. The safest place to enter a sell is when you get the crossover above zero. Where re-entries become risky on the MACD is when they start running horizontal. So you can see over here, we can see the MACD is beginning to run horizontal, and we can see the histogram. You can hardly see it because remember the distance in the histogram is the same distance between the MACD line and the signal line. So trades become risky when it goes very flat and horizontal and it's moved far above the zero line. I just wanted to touch on that before I look at the other signals. But where it kind of pulls down again and you get a crossover, then the risk is lower. But especially on high time frames, I never fight the MACD. That's one of my rules. So especially if we went to just looked at a high time frame at this time, so we'll go right back to this morning quickly. Where are we now? So what time was that? When prices are going a bit sideways, around 543. Let me just find 543. So we can see here, 543 would have been around this area. Can we see prices going sideways? And already the MACD, let me just blow it up a little bit. Can you see here the MACD is already crossed over? And that's why we got the MACD in our strategy. The MACD is probably the most popular indicator on TradingView. And we have obviously customized it quite a bit to suit our strategy. But once you start getting rangy, and once the 3 minute is crossed over, it becomes very dangerous to try and pick up buy signals. So I was looking, I did take 8 pips this morning. I mean, I took 50 on Saturday, so that kind of canceled it out. But there was no signal. Sometimes I watch for hours, and I'm trying to be cautious, follow the rules. But once it gets rangy like this, and especially the high time frame is crossed over, then it's risky. I don't fight the MACD. I wait until we've got this look. This is when you want to enter trades. If you look at the MACD at this point, you can see when it's running separate and parallel, those are the times to enter trades, all right, for a buy, and obviously the opposite for a sell. But if you just go back to the 1 minute, we just wanted to look at the different signals on the MACD. So obviously there's 3 clear signals we can use in the MACD. I've already mentioned the one, and that is when you've got these crossover circles. So obviously the bearish crossover circle, we added that, some months back. That's a bearish crossover circle. That is a signal. It can be a valid signal to enter a trade. And plus, obviously, there's the bullish crossover circle. That's where the MACD crosses the signal line. That can be a valid entry. So that is one signal. We can use the other is the triangle up or triangle down. So there was a counter trend signal. And just before that triangle down, that's reverse re-enter. So that's the second signal that we get on the MACD. And the third one is the one I really like, and that is when the MACD changes either to bright green or to bright red, especially on the 3 minute. So that is massive. So if we just looked at the 3 minute, let's blow up the 3 minute very quickly. So the 55, and also we can see once, so this was this morning, so once the MACD changes color, we can see hardly ever does it go bright green, bright red, or bright red, dark red. It doesn't alternate. Once it changes, it tends to run. So we can see, for example, this counter trend signal, there were 2 here. Once you start getting bright green, the trade tends to run for a long time. And same with bright red. Once you get bright red, I've often said it's as good as the entry signal. So this was early in the morning, 20 to 4, but once it went bright red, I mean, bright green, that trade ran up, almost, 190 pips there. And again, it's sort of been counter trend, but once it goes bright red, look at that. I mean, that price dropped down, what's that, over 110 pips. And so that is a valid entry signal. We can see over lunch, around lunch today again, it went bright green and there was this big move up, 130 pips. And then this evening now, bright red from 4 o'clock, went bright red. We can see from then, prices dropped all the way down almost 250 pips. I mean, you can, if you want to risk it, once the MACD changes color, you can stay in the trade as long as it's red for a sell, as long as it's green for a buy. You will get stung sometimes because you will get big pullbacks. But for example, here, 12.20, we went bright green. If you had stayed in the trade until the first bright red signal, there still would have been almost 100 pips, 99.75 pips. And likewise, if you had entered on the first bright red signal there, on that one, you could still be in the trade. You would be 210 pips. And so if you want to take trades longer, the way we've redone the MACD with the colors, very good. So again, 3 signals on the MACD, the crossover circles, triangle up, triangle down, then also the MACD changing to bright green or to bright red. Now remember, you can set alerts for that. So if you right click, if you know how to set alerts, you add alerts on the MACD. And so we've got the MACD histogram bright green starts. There's your one, and you then histogram bright red starts. So you can actually make set alerts for that. All right, so that is the power of the MACD. It's a really strong part of our strategy. Now remember, you can also use it for an exit strategy. So exactly the same thing. If you wanted a safe place, if you entered the trade, you took this buy, you're looking for places to exit. The first exit could have been on triangle down. You could have taken your money there, still in a good trade. Your next exit could have been on the bearish crossover. You could have taken your money there. And if you held your nerve, or that actually on the same one, you could have entered on the first histogram bar to go dark green. So those are ways you can also exit trades. So obviously that's exiting a buy. The same for a sell. You could exit a sell, triangle up, or histogram going dark green, or you could also exit on a Buddhist crossover. So the MACD is very good. There are a lot of signals there, both to enter, confirmation, enter, and also to exit. Then finally, before we do a bit of back testing, let's have a look at the force table. I really love this table. We'll just blow the screen up here. Well, actually, we'll leave it here so the table's more central, but let's remember, everything's editable. You can edit this. I'm just going to make it very big. So we'll just make it large. So this table is giving us a lot of information. I mean, I look at this table all the time. What I love about our table, it's just taking time to just load it bigger. There we go. Hopefully that is clear on your screens. But this table gives us an amazing amount of information. So remember, a lot of this table is to confirm our rules. And so, our first rule is our trend zone. On the high time frame, does it match? So it may be good on the 1 minute, but the high time frame will always tell us. So immediately, if we trade in the 1 minute, we want to check for confirmation on the 3 minute. And one glance can tell you basically what is happening. Likewise, on the 3 minutes, we can look to the 8 minutes and get confirmation. And so this table suits. So when I'm trading, I'm just keeping an eye on the table. And if a buy comes and I'm mainly seeing red circles, I just ignore it. Likewise, if a sell comes and it's mostly green circles, I just ignore it. I like to trade with trend. But this is giving us a huge amount of information. So there are a number of signals that you can actually pick up too. So I've said there are already 7 signals on the main indicator. There's 3 signals on the MACD. Then there's another 3 that we can use on our TrendForce table. And so first, if you look at the MACD, there are 4 different potential colors on the MACD. There can be obviously dark green and dark red bright green, and bright red. And so basically when the MACD crosses over, you'll get a green circle for a bullish crossover. Likewise, for a bearish crossover, we get a red circle. But remember, after a few weeks after we released the table, I just adjusted the programming so that when the histogram goes bright red, bright green, this circle will change to bright green. And likewise, if we're in a sell, for example, and the histogram goes bright red, then our MACD column, the circle will change to bright red. So the way we use it for a signal is that we look to a higher time frame. So if I'm looking to enter a trade on the 1 minute and I'm watching the 3 minutes, look at that. So just right now, this has gone bright. I love this. The lights are changing. Let's just go to where the trade is now. Obviously, we're very counter trend, so we're going to ignore that. But if, for example, this is a good example now. So we wouldn't take this trade. But if I was looking to enter a trade right now and the 1 minute was bright green and the 3 minute was dark green, so that would mean we've had a bullish crossover, but the histogram over here has not gone bright green yet. Now remember, the 3 minute going bright green for a buy for me is huge confirmation. So I would treat that as an entry signal. So if I was waiting, we've got a crossover, I'm looking at the 3 minute, and maybe I've already had a buy signal, but the histogram has not gone bright green. Once that goes bright green, boom, often I'll take a trade based on that signal, the circle on the 3 minute going bright green. Now, another reason why I did put this in the table, the histogram colors, is that sometimes the histogram may be very small. We get a triangle up, and it sometimes does obscure the color change. That's why I tend to look at this table quite a lot. So likewise for a sell, if we're looking to go short and the M1, that may be bright red, the M3 may be dark red. When that changes to bright red, that becomes a valid signal. Now remember, if you trade in the 1 minute and you see the 15 go bright green, for example, you've got to be a little bit more cautious because on high time frames, there may be a bigger pullback. So you've got to be careful. So I tend to only look for the circles close to the time frame I'm trading. So if I'm taking a 1 minute signal and the 3 minute goes bright green, boom, I'm in. Likewise, if I'm on the 3 minute looking for confirmation on the 8, then and the 8 goes, say, bright green, then I'm in. But I would be more cautious about, taking a 15 minute going bright green if I'm on a 1 minute trade, because there can be a lot more movement on the 15 minute. All right, so that's the first signal we can use from the force table, the MACD changing color. And then also we can see obviously our trend zone. That can also be a potential entry. Obviously, if we're on the M1, we want to obey the rules. So, for example, obviously our trend zone is not aligned. We're basically still below the EMA, so we're not interested in buys right now. But if that was bright green and the trend zone, there are only two colors, bright green or bright red, color change there could be, you could hop on. And likewise, even if the M5, if that went, let me just get my mouse out the way. If the M5 went bright green, that could be a valid entry too. The trend zone have crossed over, that means there's going to be momentum. Remember, every time the color changes, there's a sign that there's momentum. And so we look at the trend zone, and then finally the 21. So a lot of programming's gone in there. That's the third signal we get from our trend zone table. So there are 4 colors here too. So there's obviously bright green, bright red, dark red. And so once the angle changes, so once like the 21 angle changes to up, then that is when that goes green. And if it's steeper, it goes bright green. And the same for a sell. So if you're in a sell, for example, and the angle's not too sharp, then it's going to be dark green. But once the angle gets a bit sharper and there's momentum, then it goes bright green. Now, it's not 100% on the angle. I've got a lot more programming stuff in there, but basically it's a sign that the trend is gaining momentum and you're likely to get into a risk-free position. So again, those are the 4 colors. So if it's dark, it's still safe to enter. It means it looks so right. As I've said that, we've got a bright red signal. So something's happening there. So what I want to do now, let me just make that smaller again. Because what we're going to do now is just do a little bit of back testing on what I taught last week, and also look at potential signals. So where's my table here? Let's just change that to normal. So I reckon that this table really makes a massive difference. Yes, so Nickel asked, do you want all 4 circles in M1 to be bright green? Yep, that's ideal. They don't have to be though. So if it's all bright green, yep, that's great. Sometimes your zone alignment may be orange, so you're between, it can still be safe. But definitely you want them at least all to be green. So sometimes at the entry of a trade, that may be dark green, and the 21 may be dark green. It may be still safe to enter, provided, you know, the 3 is good. But obviously brighter is better. Brighter means it's going to move. So Ty, you've answered a question there. So let's just look. We're going to go now to the 8 minutes.
While you're finding that, Dad, I was just basically describing with that trend table, the more you watch it in real time or mess around with the replay feature, you'll see the most ideal trades are getting back on trend. And so if all of the lights above, if you're trading from the 1 minute and all of the timeframes above are mostly green, and say half of the 1 minute ones have turned red, as they turn green again, that's a great sign that we've just had a pullback on the 1 minute chart, but everything is now basically getting back on trend. So then as the 1 minute circles all turn green again, in line with higher time frames, that can be a really ideal place to be entering. Dad, you can comment on that if that makes sense.
Yeah. Look, I mean, the thing is, basically the bottom line is the more the lights are the same color and the brighter they are, the safer trading becomes.
Yeah.
So that's why I love the table. One look can tell you just basically how safe a trade is. So anyway, we're just going to end off just looking at price action based on our lines we drew last week. So I really want to encourage everyone, if you didn't look at last week's video of training, look at it, because again, looking at the big picture is so important. You can't just press buy and sell. You know, the big moves come when price rejects a line, breaks through a line, you know, breaks through a trend line. And I've just learned that from experience. And so if we just we had a look at this earlier. So look at again, let's have a quick look again. We can see this was a previous resistance line I drew on the 4-hour chart, was a key level. If you went back, we can see how it respected it there. And if you went back further, I mean, I won't keep winding back, but you can see that was a clear key level. This is the 8 minutes. So there's about 6 candles, 48 minutes. It couldn't break through that level. So remember, one of the sayings in trading, always look left, ALL, always looking left. Again, you look 4 candles. That's 38 minutes. Price couldn't break above that level. So obviously that means it's a key level. Then again, so what I do is I quickly flick on the 4-hour in the morning now, double check back. We can see again, price came back up. There was a buy signal, and price came again at the same level, tested this level, couldn't really get higher. And the reason why price dropped that 180 pips, whatever it was, is that it closed below that key level. You see, every time it closed below, price dropped, came back up again, dropped. But look at price action here. This is amazing. We can see price dropped again. It stopped to the millimeter on the 4-hour trend line that goes way, way, way back. Then it obviously went back up, came back, retested the trend line, broke through. And again, look, this is another previous resistance level that we drew. It's double tested it twice. It bounced off that. And this, you can see this thin gray line is the 0 on a 4-hour fib. And price came back. You can see how it respected this fib line we drew. And then again, it's now hovering. It's kind of caught between the trend line, and it looks like it's breaking above that fib level. So maybe price is going to move up again. But in back testing, you can see just how accurate these lines are. So for example, if we just leave the indicator off for a second.
There's one more trend line there, Dad, that would have given us that entry. From that left point, go back slightly.
Where?
To your left slightly. That's point 2, but go left.
Yeah, there.
No, lower. Go that low. Yeah, yep. From there, across, from that point, if you draw a trend line from that one to, back up. There.
This way.
Oh, no, you're in the right place. Sorry.
Yeah.
That low, that's point number 1.
Yeah.
Go drawing from there to the right, up towards the next higher low. Yep, so go. This will give you your entry. Keep going right, further right, further right, further right, further, 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 further. There, that's the low. There you go, there you go, there you go, like that. There you
Cool.
go.
Yeah.
Guarantee you're getting a signal around about that point right
Very
there.
good. Yeah.
Just after that, yeah, first bullish, bearish, sorry, big bearish candle, that break. Getting a
Yep.
signal around that kind of trend line break there would have been gold.
Massive shot. All right. So if we look again here at, we can see how these are the high time frame lines we drew. So if we put on the indicator, there was a counter trend signal there, and price came down to exactly the trend line we drew on the 4-hour. So it rejected that. When price rejects a trend line, there's always a huge. So look, from that rejection, look at that move there. That move was how many pips? You know, roughly 300 pips. But look how price action moves around the high time frame lines we drew. So we rejected a trend line, tested it twice, came up to a previous resistance line we drew. We can see there was it broke through, then there was a bit of a retest, then price moved up. You can see this is the zero line and the fib. We can see price tested that area, rejected it, and where did it stop? Right on a previous resistance line of significance we drew. So when it rejects a line, you always look for a signal. So obviously you probably have the indicator on, and there's your buy signal. Now that wasn't ideal because the 55 we would have liked to have seen, you know, lower down, but because you've rejected a significant level, you rejected a trend line, you rejected a significant level at that point, that trade was only going to go one way, and your target would have been that line, 155 pips. So you'll see that price always moves between these levels on high time frames. So if we just do a little bit more back testing, we can see, look at this move here. So we can see again, once price, you can see, look at our price came up to this level. There was also a trend line, so almost like there's double trouble there. Price tried to break the trend line, couldn't, got stuck between the trend line and the previous resistance line we drew, tested it numerous times, then came down. And then at this point, look what happens when price breaks that trend line, it just rocketed up. So whenever price breaks the line, we look for a signal. So there was a buy signal there. There may have been reasons to wait because of that trend line. But again, I said you can enter a trade on a candle changing color, provided that it's not too far from the trading trend zone. So we would never take a trade, you know, on these candles because they're too far away if the color changed. But if that buy signal came, I would have been waiting just to see what was happening. Because remember, always looking left, price had respected this trend line on the left. We want to see it break. And here we see it broke. Candle going bright green means buyers are jumping in, excuse me, that becomes a valid entry. And we can see, look how price rocketed up, almost, not quite, but I mean, this has been drawn in a 4-hour chart, so it wouldn't have been that accurate for the 8-minute, but basically price almost went up to that 4-hour trend line, but couldn't break above that previous line that we drew. And so again, breaking a trend line, there's always big moves. And if we just keep looking back, you'll see that the pattern is repeated. And sometimes this is the 236 fib number. We can see, you know, prices rejected the trend line that we drew, 4-hour trend line, and then moved up, got stuck around the 236 from the fib, and eventually moved up. And you'll see often, if you understand the big picture of price action, price is always moving between the trend lines, lines of significance, and also the fib lines we drew. So if we just look at some more examples, price rocketed up, shot up, because often there's liquidity in these zones here. So this previous resistance line, good price action there. And you can just go back in your own time. It's great testing. You can see how when price moves, it often moves around the fibs we've drawn, respects, you know, resistance lines there, and also couldn't break above that trend line for quite a while. And likewise, you can also, let's just end by having a look at the NAS. Let's just see, quickly blow that up, and we'll take the indicator off and just see what has price done based on what we've drawn previously. We can see also some good price action here. So we can see once price rejected a level, there was a significant level. You may not see on the zoom, but the zero line is exactly halfway through that line of significance. But price broke, closed above, it tried to close above there, pulled back, closed above, shoots up. Where does it end? On a trend line. Okay, then it ends up rejecting the trend line. Whenever it rejects a line, often moves down, broke 2 trend lines, and of course fell off a cliff all the way down. But if you just keep looking back again, you'll see significant lines. Here we look at this. Price rejects that, goes up to another level, comes back, breaks, rejects, moves down. And you'll see that continual pattern. You know, here, this move up, it probably would have been a buy signal. There was a buy signal. Price breaks through that trend line, shoots up. Where does it stop? On a previous line we've drawn. It comes back. Where does it reject? The previous line we've drawn. Again, that area rejects that trend line, moves up to previous line we've drawn. So I can't encourage you enough is that spend time on a 4-hour chart, like one like this. So again, you delete the indicator, and then you simply change it to 4-hour, and then you just look for, let me just see where price has gone. Now I'd say it looks extremely busy when you do it like this, but when you blow it down, take the 8-minute, you'll find that those lines, you only may see 1 or 2 in a session, but you can just watch how significant these lines are. Every line is a price, is a line that's been rejected or accepted, great for price action. All right, so let me just set that back, go back to the US 30. Well, maybe I'll give you do you want one more secret source help for one thing that I've done? I think I'm going to show you. All right, so here's the 3-minute. I want to show you something significant on the 3-minute. And then you can also do this. I found this very helpful. So we see here is a purple line. All right, what's that? Because price came down. It was almost a head and shoulders, moved up. So that was significant there. This is my 3-minute chart. We can see again, price came down to this purple line, shot up here. There was a counter trend signal, stopped on that purple line. Look at this here, how price respected this purple line for quite a lot. This is a 3-minute chart, so maybe there's for half an hour, price got stuck there. And let's just go back. I want to give you some help here that I found very helpful in trading. Let's just look back. Look here. Price went up to that purple line exactly. To the millimeter, rejected it, and went the other way. I'll go back. We're almost running out of time. Again, look here. Price never broke above that purple line. Okay, I'm dragging this out just for fun, just to end the session. Again, look here. This purple line. Look how price, when you look back, price couldn't break above that purple line. And we'll look at one more. Let's just go back. I've gone back quite far now. We'll find another line somewhere. I won't go too far back. Let's just see if I can pick it up here. Whoa, here we go. Here's now my little red line. And look here, how price respects it. If you go back, you'll find that. Now, what is that? So here's a bit of secret sauce to add to your, what I do. You see, you don't want to crowd your charts too much. Right, so the 3-minute, I don't have much, but if I can add something that doesn't clutter the chart, but gives me a lot of information, then I add it. So what I do, this is my 3-minute chart, so I'll turn the indicator off, and what I've done that I find very helpful is I'll take my 3-minute, I change it to a daily. Okay, so here's my 3-minute chart. Let me just turn the MACD off, that's not relevant. And what I've done on the daily is I've done a fib on the daily. Now I do one on the 4-hourly, so that appears quite often. But what I've done a fib on the daily. So what we were seeing, look, we were seeing that purple line, and we were seeing this red line, which is the 236 and the 382. So I was kind of stringing it out just for fun. So I did a fib on the daily. I changed the 3-minute to daily. I did a fib from the low to the high before the first pullback. And you can see how price works. I mean, when the golden ratio is the 618. Price came back to the 618, rejected that, and then started to move up, came back to the 382, rejected 0, came back to the 236, and you can see how price follows the daily fib. And we're now around the 382 level, and it looks like price is going to move up to the 0.5. So based on the daily, we can see price is bullish, rejected a line, moving up. So I've done that. So I would encourage you, if you want to just get a bit of extra secret sauce and you want to know where the daily fib levels are, just take your 3 minutes, change it to a daily, and then do a fib. This is the way I do my fibs. Tom may do them differently, but I find them very helpful. And we can see the key levels will then, for your daily, will come out on your chart, and that'll help you with price action. So if we just look at what's happening, we can see the daily still looking bullish. And the last candle, the 55 in the daily, look, has changed to bright green. So there's a good chance that price is moving up to 43121. That's going to be the next level, hopefully. I mean, there has been a big pullback, but still the big picture is bullish, price moving up to the 0.5. So let's just get that back to the 3 minute. We'll go look a bit of a mess, reset chart view. There we go. So Ty, I think I'm going to leave it there for tonight. We can see, look here, price, this purple line, this is the 382. So interesting level. So I think I'll leave it there. And
so good. Couple quick ones. Nicole asking the star and the lightning bolt quickly. I know you can rattle it off pretty quick.
Okay. So the star is just, you can
change it.
You can change it. So if you look under inputs, it's under, where we go, higher highs, lower lows. So at the moment, the number of periods, which is the number of candles, so I've got it set to 20. So on the 1 minute, the 3 minute, it'll go back 20 candles. So if you're on the 3 minute, that's going back the equivalent of an hour. On the 1 minute, 20 periods, the 1 minute will be basically 20 minutes back. So basically, whenever price breaks a previous high, based on the last 20 candles back, it begins to plot a green star. And so that star would have probably started down here and would have moved up. It would have stopped there as price pulled back. Let me just make it bigger. So that star may have started on that candle, would have jumped to that candle, would have jumped to that candle. Now, when price pulled back, it would have stayed above that last high, would have pulled back there. But once price broke that previous high, that star would have jumped from that candle to that candle. So that can be a valid entry. Obviously, there are reasons not to take that trade because we've got a resistance zone and the EMAs are not aligned. And then it will stop. So basically, it'll stop on the last high. And likewise, we will see the red star. We've broken a previous low. So the red star is just plotted. And if the next candle breaks lower, that's going to pop there. And it's going to keep going low until price makes the bottom low, and it'll stay there until price moves up and pulls back, and then the low will move to the previous low. And likewise, if price now, say it moves down to this S1 level and moves up, that star is going to stay there until price breaks that previous high. So once price breaks 42,714, that star is going to jump across and will keep following the candles up. So that's the star question. And the lightning bolt is when price breaks through a previous line of a resistance zone or support zone. So here we've got this resistance zone was plotted from that candle. And we can see price came up. Here's a good example. Price came up and retested the zone, but rejected it. So in other words, this resistance zone is like a supply zone. There are sellers waiting to push price down. So you can see price came up, rejected, tested that zone twice, came down. But on this candle, if this candle broke above that level, closed above, you would get a lightning bolt. And this zone, which is previously a resistance zone or supply zone, would change to green, showing that it's now a support zone. And a bolt would plot to show that you've broken that structure and price is moving up. And the same for a sell. So I'm trying to think, so we're too far away here. But for example, if this price, here's a demand zone or a support zone, if price moved down and broke that line and close below the previous low, then you get a lightning bolt would appear, and this would change to red, meaning it's no longer a support zone, but now a resistance zone, and then price would close below. So that is how they work. I've got in the code, I delete them because everything you keep, uses memory. That's why there are a lot of things I delete, like the TPs, I delete them just to keep the indicator moving quickly. So hopefully, Nicole, amazing. Thanks. There we go.
Lovely. Always good to have a
Okay,
refresh. One more thing, Dad. Do you mind rattling off from 1 to 13 what those signals are, so everyone who just maybe have heard them here and there and everywhere from top to bottom?
So there's 7 in the main indicator. Number 1 is the buy and sell signal. Number 2 is the counter trend signal. Number 3 are our buyer and seller momentum signals, those little wedges. Number 4 is our EMA 55 going bright green or bright red. Number 5 is the lightning bolt. That's when you break a previous support or resistance zone. Number 6 are the candles changing color. But remember, you only take that as a signal if they're right close to your main trading trend zone. Sometimes they change color, you're far away, that's risky. It must be close to the trend zone. And number 7, I also just mentioned it, the higher high or lower star. So green for the higher high, red for the lower low. So there's 7 in the main indicator. Then for the MACD, there's 3 signals we can use. They're the circles, the bearish and bullish crossover circles. Then there's also triangle up or triangle down. And then thirdly, there's a histogram changing to bright green or bright red. And then finally, in the force table, there's 3 signals there. So the MACD changed to bright green or bright red. So on a high time frame, so if you're on the 1 minute, and it changes on the 3 minute, especially, that's very powerful, to bright green or bright red. Number 2 is the trend zone changing color. So on a high time zone. So if you're trading the 1 minute, the 3 minute may be good. But if the 5 minute goes, say, bright, goes to green, means there's a crossover there. That could be a good signal too. And finally, the last one, number 13, if you're counting all, the third one on the force table, is the 21. The color shade change. So that may change to bright green or bright red. That means the angle's sharper and there's momentum. So those are the 13 signals.
Absolute gold. Man, thank you. Got those
So
all
that's been
typed up for the
tonight.
notes for the video description, and I'm sure everyone appreciated the refresh at the end of it. But Dad, thank you. That was brilliant. I think there's one thing while you were teaching. I don't know if you can go back to one of the most hero looking signals that we saw. That there was a buy signal where price just went very vertical, and I just wanted to highlight. Buy. I think it was a buy. It was one buy, not too far back. It might have been when you were on a different time frame, but yeah, that'll do. Yeah, that'll do. There's that one and one more. Basically, just wanted to highlight to everyone these 2 things to always think about, which is angle and separation.
Yep.
So it's like anytime you see a phenomenal angle, like especially in not just the 21. I mean, remind me. Sorry, what's the shorter one there? The green moving
13.
average 13. So when the 13, like when you get an explosion in price, when the breakout is basically happening. If you see great separation and angle in the trend zone where Dad's mouse is, and at the same time, simultaneously in the MACD, those are the golden things to look for. And there was one earlier where we were showing, I think you'll find, go further left a little bit. Those are there you go. I mean, that's not great angle, but can you see how at the same time, you've got the MACD separating, and then when the MACD hops over 0, that's also when that counter trend signal popped off. And then that's when they went up. So when you see those combinations where both trend zones on above and below are both separating and have got a strong angle, and when it's hopping across 0 on the MACD, that's kind of the trifecta in terms of just what to spot. Like we've got all the signals, but if you're looking at the right point in the move, the best point in the move is usually when it begins and when it's crossing 0 as well, as opposed to what Dad was saying, when it starts to go flat. When the MACD starts to go a bit horizontal and just kind of hovers along, and that's when the move is starting to having to regain some strength. But you can see there, after that, it goes vertical again. Like that starts to separate on both the MACD and the trend. I mean, we've already hopped above 0, but those are the things to look for. Just think angle and separation. And obviously when it crosses across the 0 line as well. Those are the most ideal in terms of price action to look for. But Dad, you gave us so much tonight. Thank you. This is worth rewatching again and going through all those different signals and getting familiar with them, because there's so many different opportunities to have confirmation. So, all right. Any final closing thoughts, or is that us? 9 o'clock on the dot.
On the right. Well, thanks for joining us, guys. Trust you've got some value and safe and happy trading.
Cool. All right. Well, guys, we'll leave it there. I'll announce things in the chat in the next day or two about some fresh things coming in hot pretty soon. But otherwise, I'll leave it at that for tonight. I'll leave it on the cliffhanger, but we've got some fun stuff dropping in the next couple of days. Enjoy the rest of your week. And we'll see you on Friday morning for our live analysis. All right, everyone. Trade safe. We'll see you soon.
Good night. Thanks for joining us.
One more game?
No. That's it.
Uno más?
No mas, John.